Building financial robots. We can build more complex structures with signals made up of 4 basic types of strategies. The 3 functions that we're going to look at now will give us more coherent and advanced robots. The first function is double-check signals. It only generates a signal when 2 strategies have generated the same signal at the same time. That is to say, when you have the confirmation to buy or sell from 2 different strategies. To give an example, your strategy might be one of looking for a drop during an uptrend. Drops can be indicated by using an RSI indicator that calculates over 5 periods. With that in mind, let's open up a relative strength indicator and change its default period to 5. Now let's open up a rebound strategy. We are going to tell it to buy if the trend is going up. And for right now, if the trend is going down, we are going to click in Do Nothing. Can you see the different signals that it has set up and how it's filtering out when to buy? And if, by example, we linked it up with an ROC indicator, which was functioning at 20 periods, some of those periods would fall within our 5-period span, giving us a signal to buy. So in order to set this up, let's use a greater less strategy. So open up your ROC indicator, set your period to 20, and confirm. Now, let's open up Simple Moving Average. Set your period to 5 and your graph to rate of change, then your price to ROC, and click OK. Now that we've set up our different series, we're ready to generate some signals. So let's open up our greater less strategy. We're going to look at Series A, open up the box, and choose ROC. And now go to the Series B box, open it up, and choose SMA, which means Simple Moving Average. And in your graph section, you want to click on the box and choose ROC again. Now it's time to link our 2 strategies together. Open up the double check function. Go to the first strategy and choose the rebound strategy. Then go to the second strategy and choose the greater less strategy. Now we're going to name this new strategy, and we're going to call it the confirmation strategy. And as you can see, on the main panel, only certain signals appear. They are far fewer for the simple reason that they are only denoted when both strategies confirm the signal. Now let's move on to an example of a situation where we are interested in entering the market in an uptrend and pulling out from it when it reaches oversold levels. In this case, an intersection of averages can be used as a basis for a market entry strategy and an exit from the market when going into the RSI oversold zone. We're going to deal with 2 strategies that can be combined into one by using a function called join signals. Open up Simple Moving Average and change the period from 14 to 15. Then click OK to confirm. Now what we want to do is to create a strategy that will generate a buy signal where the moving average intersects with the closing price at the bottom of the graph. In order to do this, let's open up Cross Strategy. In Series A, we'll choose the trading instrument, for example, Euro-Dollar Close. And in Series B, choose the Simple Moving Average, SMA, with a value of 15. We've just set it up. Now, where A crosses B going down, put in do nothing. And where you have A crosses B going up, Make sure that it's the buy signal. Now click OK to confirm. Now let's get Arena to generate an output signal from the market. Open up the RSI indicator and in period, put 7. Click OK to confirm. Now let's open the rebound strategy in order to create an exit on a long position. In Series A, make sure that in the blue box on your right side, you have entered RSI base high, of which the upper limit will be 70. And in Series B, make sure that you have entered RSI base low, of which the lower limit will be 30. In Series C, you'll need RSI value. So what we're interested in here is when the trend goes back up. After that, in the fourth box on your right, where we have the C line going from the top to the bottom, put in do nothing. And where we have the C line going from the bottom to the top, put in exit long. And in the graph, click in relative strength index. Now it's time to combine the signals from the two strategies using the function join signals. So open up the join signal function, and as your first strategy, you're going to choose the cross strategy, which sets up under which conditions to enter the market. And for your second strategy, choose the rebound strategy. It sets up under which conditions to exit the market. So now let's name our new strategy Total Strategy. And as you can see, its signals appear in the main panel. Finally, we have a third strategy form called the Selective Signals Binder, in which the user can define his own conditions in respects to how a strategy should act and react based on its signal components. This is done by using a special matrix. Here's an example of the moving average price which cuts through a simple strategy. Our task is to filter out signals which appear during periods of consolidation. This can be done just by using a chandelier exit indicator. The objective here is to cut off the average strategy and not to respond to sell signals while a chandelier exit indicator shows an upward trend, nor to respond to buy signals when the same indicators show a downward trend. In order to do this, we're going to create a strategy based on the cross-moving average. Open up a simple moving average and then open up cross strategy on your strategy list. And in the A series, put Euro-Dollar close, and in the B series, put in simple moving average, SMA, then value. Let's name our strategy now cross average. And in the graph, put in new panel. Now, let's open chandelier exit indicators. And this will help us build an exceed strategy. In this way, if a C signal falls above the A line, it will generate a buy signal. Consequently, if a D signal falls below the B line, it will generate a sell signal. So, in both A and B, upper limit and lower limit, you're going to set your blue box to candle exit strategy, which is CEX, and then value. And for series D and C, we're going to choose our exchange instrument, for example, Euro-Dollar close. Your upper limit will take a buy signal, and your lower limit will take a sell signal. Now all we have to do is name it. Let's call it the CEX strategy. And make sure that your graph is on cross strategy. Now we're going to put our selective signals module into action. So open it up. It should be on your strategy list. Go to the blue box opposite strategy X and put in cross average. And now go to the blue box opposite strategy Y and put in the CEX strategy, chandelier exit. And now click on the box that says table, and our selective signals table should open up. And once it does, you can see all the possible signals that are available to help you build the two strategies in question. Now, what to look for when defining trend strategy? That's strategy Y buy signals. That would be this first line in the first blue box. Here, we're looking at a buy signal for strategy X in the first column. We assume that this would be a buy signal and is usually there by default. So, when there's an uptrend in strategy Y, this will produce a buy signal. To avoid conflict with your X strategy, set the first box in the second column, that's the sell box, to exit long. You'll need to establish similar settings for downtrends. If we go to the second box in the second line, this would represent a sell strategy for strategy Y. Again, to avoid conflict with strategy X, we now have to go back to our buy signal for strategy X. That's the second box in the first column, and set it to exit short. By doing this, we have fulfilled all the requirements that interest us for these two strategies. Click on OK. All we have to do now is come back and name our strategy. Let's call it the CEX average strategy. And then we can take a look where our buy and sell signals are in the main panel.